Good evening. Welcome to We Mean Business. Power plants in the country have been suffering because capacity is lying idle for the want of coal and gas, and it's a double whammy for them because input prices have also gone up. The power regulator CERC has passed an order allowing Adani Power to charge compensatory tariff for electricity from its Mundra plant in Gujarat until supply situations improve. Will this set a precedent for other power companies facing similar problems? Is it fair to expect customers to pay for increased input prices when developers bid to supply power at cheap rates? To discuss this, we are joined by Mr. Kameshwar Rao, Energy Utilities and Mining Leader at PwC. He's joining us from Hyderabad. We also have with us Rupesh Sankhe, Senior Analyst at Karvi Stock Broking. We spoke with Mr. Ashok Khurana of the Association of Power Producers. Welcome to the show, gentlemen. Earlier in the day, we spoke with Mr. Amit Desai, Director at Adani Group, to get the reaction from Adani Group to the entire order. We asked Mr. Desai whether the order was on expected lines or did Adani Power expect something better.
See, expectation would always be more than what one gets, but this is a fairly landmark order, in as much as the Honorable Commission has clearly recognized the need to address the extraordinary situation which the sector is facing on a systemic basis, and also the need to address this particular problem of the fuel cost, which has an impact on the tariffs. So the whole solution which the Commission has articulated is really a very welcome step. I think it would change the outlook for the sector entirely, and it would really re-kickstart the investments in the sector, which the country also needs very, very badly. And I think the sector itself was also looking at certain clarity going forward.
We asked Mr. Desai what quantum of hike are they expecting, as the order doesn't mention any quantum. What would be required for break-even and for achieving the regulated return?
Well, I think we are not in the situation of regulated return. The order also clearly articulates the need for an additional compensatory tariff and doesn't really dwell on the regulatory return. It would not be fair for us at this juncture as a company to speak about our expectation, though we had made our submissions very clear in our pleadings to the Honorable Commission. Limited point which is very encouraging is the Commission has asked all the stakeholders, the state utilities, the state governments, us, a banker of high repute and an independent financial analyst, to work together and submit that additional compensatory tariff package by the end of this month to the Honorable Commission. So we would all work towards that, and one would only hope that it would result into a very positive solution for the company and therefore going forward for the sector as a whole.
Now, one member of the CERC committee disagreed with this compensation package. What will be the strategy for Adani if the DISCOMs challenge this order in court?
Well, I think one doesn't debate the business strategy in public domain, but the way I read the order, one would believe that the requirements of different stakeholders, that is utilities and us, would be discussed and agreed upon through this mechanism that has been directed. So until that has really been done, it would be both unfair and premature to even think of the next steps and the possible response to that. As of now, as I said, we all hope that this task force would do its task in the transparent and objective manner and submit its report by the due date.
Mr. Desai, there's a feeling, why should the increase in fuel cost be passed on to customers when PPAs have been signed where fuel for the power plant is the risk of the generator? What do you have to say?
Well, I would respond to that in the following manner. At one level, we all know that the country needs power, because country can have the requisite GDP growth only on the backing of infrastructure growth, and power is a very, very important factor that way to contribute to the growth on one hand. In the same plane, we also know that there is a capacity which has been created and which is suffering because of factors which are not in the normal realms of business risk. So the point that one is making, that there is a risk, I think these issues have transcended beyond the business risk, and I would explain. If one were looking at the coal linkage on a domestic basis, as a sector player, one or more of us have either not got the linkages in time or have got them lesser than what were supposed to be given as per the formula prevailing at that point of time, or people did not get the clearance for the captive mines, or they got delayed drastically, and the source of imported coal, which is from Indonesia, there also changes in the regulation suddenly struck the sector. So what was considered part of normal business risk has gone way beyond, and I think it has become, if I could use the term, abnormal situation. So abnormal situation requires different measures than the normal business risk. So it would possibly not be right to box this issue as a normal business risk and as to why this change in tariff is being sought about. Having said that, the Commission itself has very clearly articulated both the powers vested to the Commission under the Act and its responsibility to balance out the cost to the consumers and fair returns to the generating companies, so that the quality supply of power continues uninterrupted. So therefore, I think this whole step, as I said, is landmark by the Commission, which recognizes that there is no need for a renegotiation, which they have clearly articulated, but there is a need for additional compensatory package to be put up through a mechanism which is agreed by all the stakeholders.
Mr. Desai, critics allege that the rules of competitive bidding are being defeated when a generator quotes the lowest bid for PPA and then demands a price hike. What do you have to say?
Let's look at this question in a completely different perspective. If the current bids were to be seen by the generating companies submitted to the utilities, they range from 3.5 rupees per kilowatt hour to 7 rupees. This is something that even Commission has very clearly recognized in its order. So I think competitive bidding would never mean that one of the two wins at the cost of the other. So if we are thinking of competition from a perspective where you win and I must lose, then I don't think that is competition. And that is what the Commission has so very clearly and decisively articulated in its order.